and I registered.
Let's start.
Hello, everyone.
Good. Hello.
Welcome to our wonderful event. I'm Jana Weiss. I'm the Student Life Coordinator for Online College, and I want to introduce to you Angel Eke, who will be introducing our speaker. She is our Student Government Association Treasurer. Angel, welcome, and thank you for having this event today.
Hello, everyone. Good morning. My name is Angel Eke, and I'm the SGA Treasurer with the Student Government Association Online. And this event might be a Student Government Association event, but it's all thanks to Professor Ronald Desbro that is happening today. So I want to say thank you, everyone. Thank you, Professor Desbro, for being here, and welcome to this Federal Income Taxes edition. And I'll give the floor to Professor Desbro to say a few things about himself and start off. Thank you.
Okay, thank you, Angel and Jana. I am an adjunct faculty member, and I've been with Houston Community College for probably at least 23 years. I worked with HCC as an instructor back in the 80s, and I had some, I transferred to Dallas and stopped teaching then, but I came back and started teaching again. So 23 years. And I've got a little biography that I'll show you in just a minute when I start the presentation. So at that point, let me go ahead and start the presentation. And everyone should be able to see the screen. So I'm going to start the presentation. Nice little curtain opening there. And so I do want to thank the HCC Student Center, the Student Life, as allowing me to give this presentation. I gave a presentation last year because we try to promote Houston Community College and AARP Tax Aid in offering free tax preparation to our students and staff and their families and friends. So that's the topic today will be what to know and free tax preparation regarding taxes. I'm retired from IRS. I had 31 years of service, and I worked as a revenue agent. I worked in the appeals division, and so I got a lot of good experience working with IRS and taxes. And so I continue doing my taxes with instructing, with preparing tax returns and things like that. So like I say, I've been an instructor for 23 years. I have a tax practice, and I've been doing that since I retired 16 years ago. I'm up to about 90 clients, and I don't want to take on any more. I'm trying to slow things down a little bit. So 90 returns is quite a bit for during the tax season. And I also do volunteer work with AARP Tax Aid, and that is a partnership with IRS VITA. And we prepare tax returns for the elderly and the low-income taxpayers and any other taxpayers that have low income. The threshold is around $250,000 of wages that we can do. And if it exceeds that, then it's outside the scope, and we just refer them to professional preparers. So it's mostly geared to the elderly and low-income taxpayers, but we can do other returns in there as well. And I've been doing that for 17 years. Let me start in with the filing requirements and a standard deduction.
Professor Desbro,
yes.
I have somebody saying the audio is off. Is anybody else having issues with the audio?
I'm not having issues with the audio, but I cannot see his presentation.
Okay.
Yeah, I can't see the presentation either. I thought he hadn't started it yet.
Okay. Am I supposed to hit something?
You have to hit share at the top by the leave button.
Okay, let me see. Let me see where I'm at. Okay, are you still there?
Well, apparently none of the attendees can hear because someone else can't hear.
Okay. What's the best way that I can do this? Let's see. Chat, react, raise. Oh, there's share.
Yeah, there's a constant beeping sound, but I don't know where that's coming from.
Okay, select the tab, window, entire screen. Okay, I thought that screen would come on automatically. I think I
Oh, it
just.
might be coming. Tara, can you mute yourself?
Okay,
Thank you. That's where the beeping sound was coming from.
it was, okay, and I'm showing that it's now sharing. Boy, my apologies.
Yes, I can see your screen.
Okay, can you see
Okay.
the screen? Let me start from the
Yes.
beginning real quickly. And we can move these screens pretty quick because I think I already talked about them. Just a little bit about my biography with IRS and working with HCC as adjunct, and then tax practice and volunteer work, which I just mentioned. Okay, now we're up to date. Everyone should be able to see the screen that I have. And I came up with this little chart, and it encompasses both the filing requirements and the standard deductions for 2024. So I try to footnote what was the filing requirement and what is the standard deduction. There's a very close tie-in with the standard deduction and the filing requirements. So let's just take, if you're single, in 2024, the standard deduction is $14,600. Now, if you're age 65 years of age or older, it's $1,950 as an add-on. So it becomes $16,550. And I have a little footnote down here for B. B says that the filing requirement is based on taxable gross income equal to the standard deduction. Note that the extra blind deduction isn't included in the filing requirement. So if you are blind, the standard deduction allows you to add another $1,950, so for a total of $18,500. But the filing requirement says that if you have $16,550 and you're over 65, you're required to file a tax return. So note that it does not include the blind extra standard deduction in determining the filing status. So very important. And then you can go down with the head of household, it's $21,900. Same principle, that it doesn't include the blind, but it does allow the extra 65. A married filing joint is $29,200. Now note that their additional amount for being over 65 is less than what a single person and a head of household is. So it's $1,550 add-on for each person that's over 65. So you could max out $32,300 for the filing requirement and the standard deduction if you're both over 65. But if one or both are blind, you can add that onto your standard deduction, but it's not going to be added on for purposes of the filing requirement. And look at the next one, the filing status for separate. It's $14,600 for the standard deduction, but look at the footnote A. The footnote A says that if you have $5 of gross income, IRS requires you to file a tax return. So that threshold drops significantly, and because IRS wants to make sure that both parties are going to be reporting their fair share of the income. So that, also I want to talk about dependents. Dependents, if they have unearned income of $1,300, and I'm going to define that in just a minute with another screen, or $450 plus earned income limited to $14,600, and note that is the standard deduction, then they're required to file a tax return. So if somebody has some interest income over $1,300 and they have no other income, well, they're going to be required to file a tax return, even though up here the $14,600 for a single person, they don't have to file. So IRS has that threshold real low because they want to make sure that you're going to be reporting income. And note that the standard deduction for that is $1,300. So if you have $13 of or $1,400 of unearned income, you have a standard deduction of $1,300. Now you have to pay tax on that $100. So it's they are wanting to make sure that unearned income is getting taxed. Purpose of this is if if you think years ago, the parents had some investments that they transferred to the kids. So they wanted to move that income over and assign it to their kids and actually transfer ownership to it. And so they were circumventing the taxes that they had to pay before. So that's why Congress changed that, saying, okay, you're only going to get a $1,300 standard deduction for unearned income, because to alleviate that issue where the parents were sending the investments to the kids to not have to pay taxes. So that's the reason why it's so low. But on earned income, it's back up to the 14,600 for the filing requirement. Okay.
Professor Desborough, we have a question in the chat. What are deductions and what does that mean?
Okay, well, the standard deduction, if let's backtrack. The formula for determining income is based on gross income, and then you have any adjustments to income. Let's say if you have an IRA, you get to subtract that from your gross income. And then if you have standard deduction or itemized deductions, you can subtract that further to arrive at taxable income. So the standard deduction is what Congress has dictated, a standard deduction for everybody, to subtract that from their gross income and then to arrive at taxable income. So it's a good question that if you're new to taxes, you may not know what this standard deduction is, and that's what it is. You have an option of a standard deduction or an itemized deduction. Itemized deductions can include interest, taxes on your home. It can include casualty losses if you're in a federally declared disaster area, like we were with Beryl. And you can also include contributions you make to your charities, medical expenses in excess of a certain limit. Those are itemized deductions. And Congress came up with this high standard deduction to avoid you having to keep track of all your records for itemized deductions. And that's the reason why the law had changed back in 2018, and it just escalated the standard deduction to where most taxpayers can't itemize. So it's helping IRS out on audits, because now they don't have to audit those people who have itemized deductions. So does that help under the understanding of a deduction? Okay, I assume that is a positive, so I will move on to my next screen. Now here's the definition for the filing requirement for earned income. It's wages. It could be union strike benefits, net earnings from self-employed income, like a Schedule C business, non-employee compensation. Let's say if you have a nonprofit, or excuse me, a profitable business, you're going to get a 1099 NEC, which is non-employee compensation. Long-term disability benefits received prior to reaching the minimum retirement age. So if your business where you're working at has a retirement age of 60 years of age, then any disability you get under that 60 years of age can be considered as earned income. This becomes very important if you can qualify for the earned income tax credit, which is very nice if you have benefits have children living with you. Very important. This is what earned income is. Now let's define what unearned income is. Unearned income can be interest, income, dividends, Social Security benefits, pensions and annuities, veterans benefits, workers' comp, unemployment compensation. And this is a big one: taxable scholarship or fellowship grants not reported by a W-2. Now this has a twofold purpose. One is scholarships are considered unearned income, but when you're computing the standard deduction, they allow it to be treated as earned income for purposes of the standard deduction. It's the craziest rule, but it helps the student out if they're trying to determine if they have to pay tax on that scholarship, because the Congress says we will let you treat some of that scholarship as earned income up to the extent of the standard deduction. And then if you exceed, if you remember a single person is 14,600 and you have a scholarship of 15,000, you're now going to have unearned income on that difference of that $400 from the 15,000 from the 14,600. So that's keep this in mind, because I'm going to cover this towards the end when we talk about the credits for education. Now we're getting into the credits. There's two different kinds of credits that students can get. One is the American Opportunity Credit, and the other one is the Lifetime Learning Credit. The two are very beneficial to students that are going to school. And let's not define what expenses that you can include for American Opportunity Credit. You can include tuition, fees, books, and any equipment that you might need for purposes of going to school. One major one is a computer. If you're taking online courses, or your instructor requires you to take online examinations, and you have to do it with a computer, you are allowed to treat that computer as an educational expense for purposes of getting this opportunity credit. So, and you can include other things that if you have to have a printer that might be needed because you have to turn in certain hard copies, that might be able to be included in there as well. General information about the American Opportunity Credit is that qualified college or university or school must be qualifying. So Houston Community College qualifies, San Jacinto, University of Texas, University of Houston, anything that's like a university or a college will qualify. Trade schools generally will not qualify. Online courses taking where the college or university does not have a main campus will not qualify. The expenses that we talked about up above, the maximum that you would use towards the American Opportunity Credit is $4,000 of expenses. And that's tuition fees, books, equipment. And that's per student. So if you're living with your parents and they want to claim this American Opportunity Credit, they can claim that per student. So if you've got other siblings that are going to college as well, then your parents could get this $4,000 of expenses towards each student. Now, the credit maximum is only $2,500, but the first $2,000 of qualifying educational expenses are allowed at 100%. So the credit is $2,000 credit. And then the amount in excess of the 2,000 up to the 4,000 is 2,000 times 25%. So you're only going to get 25% of the dollar after that. So that's where the $2,500 comes into play. The 2,000 for the first $2,000 of expenses, $500 for 25% of the excess. Again, you cap at $4,000 of qualifying educational expenses. So if you're going to a private university, it qualifies. They may have $12,000 for tuition, but all you need is $4,000 to get you to the $2,500 of the credit. There's some limitations though. It is only allowed for the first 4 years of undergraduate studies. They don't have to be consecutive years. So if you choose that the first year you're going, you're not going to get that $4,000 of expenses, you may not want to take it that year. You may want to wait till the next year where your expenses are $4,000 so that you can maximize that $2,500 credit. So, but once you get the degree, then you are not qualifying for the American Opportunity Credit. But the rule says in the 4th year, actually, if you don't get your degree until the 5th year, they look at it at the beginning of the tax year. Do you have that degree? If you don't have that degree, then you can get it for that year, 5th year, because you don't have a degree yet if you skip that first year. So remember, it's just 4 years. It doesn't have to be consecutive, but as soon as you get that degree, then it's going to stop unless you did not have that degree on January 1st. So if you went to graduate school and you didn't have a degree on January 1st of 2024, and you went to graduate school in August, you can qualify still for the American Opportunity Credit with that graduate expenses. So it's just the rule is January 1st, do you have that degree? Yes or no? Then the phase out, this is to prevent taxpayers who have significant amount of income. So Congress did not want those individual taxpayers to be entitled to a credit. So they were looking at low income taxpayers to benefit from this credit. So if your adjusted gross income is $160,000 to $180,000, then you have a phase out of that $2,500 credit. If you're, that's for married filing joint. All others, that would be single or head of household, would be $80,000 to $90,000. And so once your income hits that level, then you cannot get the American Opportunity Credit. Generally, you must offset the qualifying educational expenses with scholarships and or grants. And I've got an example of how I can show you how that works. So the tax tip is if you have unrestricted scholarship grants, include a portion as income to maximize your qualifying educational expenses. So the key thing is you got to decide, is it a restricted scholarship or an unrestricted scholarship? And the difference is if you, let's say if you went to University of Houston Clear Lake, I know for a fact that they have scholarship agreements with the students. And they tell you in that agreement that you sign and they sign that it's going to be restricted to tuition, it's going to be restricted to books, and it's going to be restricted to any housing that you might have. But if you got Pell Grants, that's unrestricted. You can use that funds for anything, any purpose. And that's the key thing. Can you use the money for anything? You can pull it out, and if you want to buy a car with it, or do you want to, or you're required to use it for tuition only? That makes it restricted versus unrestricted. Here's where you're going to be looking at your 1098-T tuition.
Professor.
Yes, question?
We have a question in the chat, and they want to know, does the deduction only apply to dependents, or if you yourself can use those deductions?
Okay. For purposes of the American Opportunity Credit, you can claim it if your parents can claim it, or you can claim it individually. Now, I do have a slide on it because there's a limitation on that. Whether you can claim that as you can't claim it if you're a dependent. If you're a dependent on your parents' return, you are not going to be able to claim it at all. However, if you're filing your own tax return, you might be able to claim it as long as somebody's not claiming you as a dependent. So I'll cover that in just a minute. And if that doesn't answer your question, please circle back and I'll be happy to entertain your question again. The Form 1098-T is what you're going to get from the college. Now, colleges are not required to issue it to you if the scholarship exceeds the tuition. So in this case, the school should be issuing you a 1098-T because the scholarship did not offset the full amount of the tuition of $5,000. But if this were reversed, if the scholarship was $5,000 and you have payments for tuition of $4,000, the school is not required to issue you a 1098-T. But what I have seen in almost all instances, the college will prepare the 1098-T and put it on your account. So you can go in there and pull that off from your account, but they're not required to mail it to you. So in this case, keep this in mind that we've got tuition of $5,000, we have a scholarship of $4,000, but we don't know whether it's restricted or unrestricted. Now, here's the two scenarios. Using that $5,000 for the tuition and the scholarship and grants of $4,000, if it's restricted, which means the scholarship must be used for tuition and books, then you must offset that scholarship against the tuition, and the balance becomes your net qualifying educational expenses. So in this case, $5,000 tuition, scholarship $4,000, you have to offset it. You have $1,000 available for qualifying educational expenses. Apply the formula. The first $2,000 is at dollar for dollar. you have an American Opportunity Credit of $1,000. So you're kind of restricted because it was restricted to tuition only. But now let's look over here at the unrestricted. A good example, if you got Pell Grants or you got the Houston Community College Foundation scholarship, that's unrestricted. You can use it for anything purpose. Generally, you should use it for tuition because you're going to have to pay that tuition in order to, when you register for the class. So a lot of it's already going to be used up. But if you got excess, then then you can pull that out. So let's go in this example. We have $5,000 of unrestricted, unrestricted. We have $5,000 of tuition. Now, since it's unrestricted, all we need is $4,000 of qualifying educational expenses to maximize out our $2,500 of American Opportunity Credit. So what happens to that difference from we only needed $4,000? I have $1,000 that we're going to apply towards the scholarship to offset the tuition. So now the scholarship was $4,000 less $1,000. What happens to that $3,000? Well, the $3,000, we can now treat that as income to you on your tax return. So $3,000, you treat it as income. You get a standard deduction, remember, up to the amount of the $14,600 standard deduction. You pay no tax, and you now got $1,500 more than you would have had it been restricted. So this is so important, and this is allowed by Congress. They even encourage you that if you have unrestricted, that you can move this over into your income on your individual tax return. So you can do this even if whether you're a dependent on your parents or not. So your parents can still claim this $2,500. You're going to come over to your 1040, your personal 1040, and include $3,000, but you get a standard deduction up to the $14,600 and pay no tax. So if your scholarship was in excess of $14,600, you pay no tax on it. But all you need is to maximize that $4,000 of qualifying educational expenses to compute to your $2,500. So this if you want to print this out and just find out whether your scholarship is restricted or unrestricted, and you can move this money around to maximize your credit. Some additional information about the American Opportunity Credit. They have this, it's kind of bifurcated refund. It's non-refundable and it's refundable. Up to 60% of the $2,500 or $1,500 is non-refundable. That means that you have to have a tax liability in order to use it. If you don't have a tax liability, then that $1,500 is lost. But Congress said, okay, we will allow you 40% of it, of the $2,500 to be refundable to you. So if you didn't have a liability, you couldn't use the $1,500, but they'll allow you at least $1,000 to get refund and treat it as if it were like withholding or a payment. So you can actually get a refund from IRS for this portion. If you are not a dependent and you file your own return, then you can claim the non-refundable and the refundable. So note I said if you are not a dependent. So let's look at the next screen.
We have a question in the chat. It's, what is a tax liability?
A tax liability is the amount of tax that you owe based on your taxable income. For example, if you have a taxable income of $50,000 and you're in the 10% tax bracket, then 10% on $50,000 is $5,000. That's your tax liability. So it's the amount of tax on your taxable income to determine the tax liability. It's what you owe for your taxes to the IRS. Okay, now this is a very critical exception. Congress did not want dependents to get that, or excuse me, for people who are not dependents, they did not want those students who probably are still living at home to be able to be entitled to that refundable credit. So if you can pass these qualification tests here, you can get that refundable credit. And you're not a dependent on your parents. So this is you individually. So, but it says that if you're age 18 or you're age 18 at the end of 2024 and your support is earned income less than 50% of your support, then you would not be entitled to this refund. The other one says if you're 18 and under the age of 24 and you're a full-time student and your earned income was less than 1/2 of your support, you're not going to be able to claim the credit. So let's finish this off first. At least one of your parents was alive. So if you had both of your parents deceased, then you could qualify. If you were filing a return as single head of household, qualifying surviving spouse, or married filing joint for 2024, you would not be able to claim this. But look right here where it says if your earned income was less than 1/2 of your support, then you can qualify that. So if you have support of $20,000, let's say your parents are providing $24,000 of support for you, well, 1/2 of that is $10,000. If you have earned income of $10,001, then you qualify to get that refund. So this says you don't qualify for the refund if any of these conditions are met. And this is where we have a lot of students that we do returns for that let's say they're 23 years of age, but they're out there working and they're getting a nice income, they're getting a good W-2, and they're filing their own tax return. They can claim that refundable credit as long as their earned income was less than 1/2 of the, was greater than 1/2 of the support. So if they have in that example $10,001, they meet the qualifications and they can get that $1,000 refund. So this was to prevent students who are filing their own tax return, who are not being a dependent, but they know they're still living at home. So they said, well, you're not going to get that refundable unless you qualify with these conditions. It's almost like an exception to the qualification to qualify. Okay, next, what's the definition of support? What's food, shelter, clothing, medical, dental, education, scholarships, unless you're a full-time student. If you're a full-time student, you cannot include that as a part of your support. Now, moving out away from the American Opportunity Credit, we're getting into the Lifetime Education Credit. And this happens, let's say after you have your degree, you already got your undergraduate degree and you want to take some additional classes. Let's say you want to start working on a graduate, a master's degree. You can qualify for the Lifetime Learning Credit, but it's limited. It's 20% of the qualifying educational expenses. The maximum would be $10,000 of the qualifying of the qualifying educational expenses. The credit is only $2,000, but notice that it's per tax return. So if you had 2 students living with your parents and that you're both going to graduate school, then the maximum is going to be $10,000 for everybody that's going to school that year, and $2,000 would be the maximum credit you can get per return. But the American Opportunity Credit was per student. So if you had four people going to school, your parents could claim up to $10,000 of credits in there. So it's not as good as the American Opportunity Credit, but it is trying to promote people who want to continue their education. Now, it's all non-refundable. You must have an income tax liability in order to offset that non-refundable. So nothing is going to be refundable to you with respect to the Lifetime Education Credit. The qualifying educational expenses, they're limited. They only allow tuition and fees and books only if they're included in your school's invoice. So if you try to buy books from the bookstore, or you go to Amazon.com or something, you cannot include those books. Where American Opportunity Credit, if you want to buy your books offline, maybe at a bookstore or with Amazon.com, then they would qualify, but not for the lifetime learning credit. And no other educational expenses, including books and equipment, would be allowed unless those books were bought through the school. There's no limit on how many years you can claim this. As long as Congress allows us to do it, it's going to continue in perpetuity. Now, the rule is it's just acquire or improve your job skills. Example, if you want to go to law school, I had a client that had she already graduated and she went to law school. She qualified for the lifetime learning credit with up to $10,000 of expenses. And it was only tuition and fees that we could include. We couldn't include her books, et cetera, because they were bought offline. And it didn't take long for her law school expenses to get up to that $10,000. So, but she was able to get $2,000 for her refund for the lifetime learning. Now, it must be a qualified college, university, or school. So you're not going to be able to get it from online courses that do not have a structure like a college university would have. Trade schools and online schools generally would be excluded. So if you want to go to welding school, it may not qualify unless it's through a college or a university. Phase out, same phase out as American Opportunity Credit. So as soon as you hit the $160,000, it starts a phase out. And when you hit $180,000 of income, you lose the American Opportunity Credit and the lifetime learning credit. So it doesn't take, so if you're a high-end taxpayer, you're probably not going to qualify for these two. I throw this in there to get some interest in students applying for IRS. IRS has a lot of good benefits. Like I say, I worked there for 31 years, and I get a retirement check every month. It's just like clockwork, and it's going to pay me for until even after I am gone. My wife is entitled to a part of the retirement as well. So the benefits are good. The pay is good. If you have an associate's degree in accounting, you could qualify to be a tax compliance officer. There's some other jobs you might qualify for too, but this is one in particular. The grades usually are from grade 4 through 9. You can get promotions up to 11 and a 12. So they call them journeyman level. So journeyman level, you hit a 9. Now I came in with a bachelor's degree in accounting. So I came in as a revenue agent, and 5, 7, 9, 11. Actually, because I had work experience, I was able to come in as a 7. And when I ended up retiring, I was at a grade 15. And I'll show you the grade scale for these in the next slide. You can go to jobsusa.gov and look for government jobs, or you can go to irs.gov and look for careers and search for jobs. Probably now is not a good time to be applying because Trump just said that he is putting a freeze on all government jobs, but the freeze may not last long because somebody has to go out there and collect the tax for the government, because the IRS collects something like 95% of the funds needed for the budget every year. So IRS is very important, but they usually get beat up pretty good. Here's the pay scale. Students love this. They like to see, well, what would I get paid if I went to work for IRS? This is the Houston area and the Woodlands area. There's different pay structures for the different cities. So Houston is one of the high-end paying, whereas maybe Oklahoma City might be one of the smaller ones. So like I said, you can come in as a tax compliance officer with an associate's degree at a grade 4, making $41,000. In 1 year, you go to a grade 6, you'll make $51,000. You'll get a $10,000 raise, and then another year you'll go to an 8 of $63,808, and then you go to a 9 of $70,000, and then after that it becomes competitive. So the journeyman level we said was a grade 9. A grade for a revenue agent is a grade 11. So after that, you have to start competing. Competing means that as openings pop up, you apply for them, and if you can get the job, then you'll become a 12. So like I said, I worked 31 years. I was a grade 15. And when I left, I was these steps mean that if let's say you're in a grade 4, you're making 41,573. After 1 year, you go to a step 2. After another year, you go to step 3. And then it takes 2 years for each of the steps for the 4, 5, and 6. So 2 years, 2 years, 2 years. Then it takes 3 years after 7, 8, 9, and 10. So it takes a number of years to finally get up there. But the first 3 years, at 1 year, you get a pay raise. And then on top of that, you could get a cost of living adjustment. So that is in addition to this. So when I retired, and but again, 16 years ago, this was not the pay, but I was at a grade 10 of a grade 15, I mean, of a step 10, making 195,200 equivalent to today's dollar. So you can have an opportunity to make a lot of money. Oh, that's a lot of money to me, but it's not like $1 million, but you will live very comfortably if you work for IRS. You may not be wealthy, but you can make some good money with them. All right, now we get into HCC tax days. This is
We do have a question in the chat.
Okay, question?
The question was, are books such as McGraw-Hill qualified for credit?
Well, the books that we said back in, let me go back to the American Opportunity Credit. Books can be included in part of your qualifying educational expenses. So yeah, if you buy books through McGraw-Hill and Connect or any of the other publishing companies, yes, those qualify as long as it's a college or university or school and you're working towards your degree, you can get that American Opportunity Credit. But we said when you get into the lifetime learning credit, it's only tuition and fees. So McGraw-Hill books cannot be included if you're trying to get the lifetime learning credit. But right now, if you're going to school, you don't have your degree yet, yeah, you can use those books from McGraw-Hill. Okay. Now, HCC tax days. We used to have HCC tax days on campus, but ever since COVID hit, students have been reluctant in wanting to come into the campus, whether because they're taking online classes or whatever the case is. So we stopped doing the actual on-campus tax days because we just couldn't get the volume coming in. I think last year we had 4 students at the East Side campus and 4 students at the downtown campus. I think it was even less than that. I think it was more like 2 and 2. So we decided we have various locations near the East Side campus and in the southeast part of Houston that we are offering HCC students to come in and get their taxes done for free. We have a site at Mission Milby, which is 2220 Broadway, Houston, Texas. It's only 2 miles from the East Side campus. We will prepare 1040s, and note, we will do 1040 NRs and the 8843s for any students out there that are foreign students. So if you're out there on an F1 visa, come on in and we can prepare your tax return for free. We have our site open at Mission Milby from February 6th through April 9th, and it's only on Tuesdays, 9:30 a.m. to 5:30 p.m. You can walk in, or if you want to call, we have a phone number that I can provide to you that you can make an appointment if you want to. We have a site at Parker Williams Library. It's 851 Scarsdale Boulevard, and it's near 45 and Scarsdale. It's about 2 miles into from Scarsdale off of 45. we can do 1040s and 1040 NRs as well. So note, both of these locations can do foreign students if that's what you need. We are open from February 3rd through April 14th, and we are open on 2 days a week, Monday and Fridays, from 10 to 2. No appointment is necessary. Just come in and walk in. We do ask you to, well, I'll show that the document in just a minute before I do that. Here's, we can prepare most returns. So like I say, $250,000 is about the extent that we can do. If it's under that, we can prepare the returns. If you have a Schedule C business, we can do self-employment income, but we're limited to $50,000 of expenses. You cannot have any employees, no contractors, but we can prepare like if you're an Uber driver and you don't have expenses over $50,000, then we can do you. Or if you're doing DoorDash or something like that. Most income reported on a 1099 NEC, a non-employee compensation. 1099K, you're getting from a third party service like a bank because you have a business, or a 1099 miscellaneous. We can do most of those. The K1s, we can only do interest dividends, capital gains and royalties. We can do IRA contributions or distributions. We can do health savings accounts. If you're working with somebody and your employer has a health savings account for you, we can do those. We can do the foreign students at those 2 locations only. Any other tax situations that's within our scope. So we can, what to bring? We ask you to bring in all your tax documents, and you can see them on the screen. It's pretty much anything that you got from IRS or an employer, bring it in, especially the 1095A if you have the Affordable Care Act insurance. Here's some additional information to bring in, especially the retirement contributions, the Form 5498. If you've got childcare, we want to see the invoices. We need those to get information off of. That 1098T for your tuition. Bring in a photo ID, husband and wife or self. Social Security cards for everybody on the return. If you're going to do a direct deposit, we ask that you bring in a blank check so we can make sure we get the right number off of there. The health savings account, the 5498 SA and the 1099 SA. One is the contribution. The other one is the distribution you got out of it. If you are a foreign student, bring in your passport because we need to see your dates of entry and any other documents that you think would be relevant to us. We have other sites available. All of these are in the southeast part of Houston. If you want to know if you have any locations other than the southeast, yes, we do. But you'd have to go to the aarp.org site and look for those other locations. But these are the ones that that are in my district. We call it District 5. And so we have other locations. We have some in Texas City. We even have some as far south as Galveston. So here's Parker Williams, and Mission Milby is right here, right above it. So these would be the 2 locations. And I'll open it up for questions, but before I do that, I want to show you a document that we have. And just quickly, it's Houston Community College student, staff, and faculty, and it preparing the 1040 returns free with AARP tax aid, and that's those sites I just showed you. Feel free to invite your family and friends. So if you want to bring your friends in, they can have their returns done with us as well for free. In the past, we had on-site tax days, but we had to make a decision because we just couldn't get the students out there for it. Maybe it wasn't convenient for them that day. So we're offering these 2 sites to have you come in and get your taxes done where we have foreign students. You can go to any other site if you just have a 1040 to prepare. We do have Mission Milby does encourage you to make an appointment. You don't have to. You can just walk in. I thought I had the phone number posted here, but it's Mission Milby. You can just Google that, what the phone number is for that. no, I don't see a phone number on there, but it's the Mission Milby. Google it and you'll find the phone number. They have been very accommodating for us that they will go ahead and take appointments. But you can just bring in the tax forms. The tax forms we'd like you to do is it's the intake sheet, which is the 13614C. And we also have an envelope for you to place that in. You can pick these up at the financial aid offices at the Eastside campus, as well as the downtown Central campus. So they're available. And I know that Janice is on the call right now, that she can tell you that they are available. She picked them up already. So that is, the intake sheet is important because it's just an interview information about you that will speed up the process. If you didn't have it and you came in, we can still do your return. It slows the process down a little bit that if you don't have that available. But you can pick those up with the financial aid department. And again, it's just a repeat of what to bring in, other tax documents. And we can do international students at the 2 sites. So feel free to come in and get your taxes done. Also, you can pick up this letter along with that intake sheet and an envelope that will give all this information right here as well. Okay, from that, I will go ahead and turn it back over to Janice.
Hello, everybody. Thank you for attending today. And thank you, Professor Desborough, for all this wonderful information. I think people really appreciate it. And being able to get your taxes done for free is a big deal because it can be very expensive to pay somebody to do your taxes. So definitely look up all those different places. Please, for coming today, I put form in where you can get a free t-shirt. We just mail it out to you. Also, it is the end of the month, and on Tuesday when I'm back in town, I'm going to be selecting names of people who filled out our survey to send them out a power bank for filling out a survey. And then check out our upcoming events. We have lots of events coming up, and we are going to post this on our YouTube page. If you want to rewatch this, we are going to post it on our YouTube page, and I did put that in the chat. It'll be next week when it goes up. And so, yes, when it goes up. And please, y'all also know we do have financial coaches here, and they are amazing with setting out budgets and helping you go through and even find some places to get your taxes done for free. Or if you need help in any way, they know where all the resources are. And you need any resources, they can help you with that. But they're amazing. They can help you do budgets. I can't say it today, budgets. They can help you with your credit scores. They're absolutely fantastic to work with. I know many of people who have worked with them, and it is really helpful. Is there a generic financial coach's email that they can? No, free taxes is not just for students. It's anybody within a certain tax bracket. Is that correct, Professor Desborough?
Yes, that is correct. Anybody can come in.
Hey, Jana, I just wanted to add, if you're on the HCC website and you search the term financial literacy, the financial coaching booking link will become available, and it's at various campuses, and we can do them online or in person. So if you need to request a face-to-face, please state that in the notes that you need to meet face-to-face and on what campus you would like that to be at.
Thank you. Are there any questions for any of us? No? Well, I want to thank all of you for coming, for helping present, for asking wonderful questions and participating. Thank you, Angel, our SGA online treasurer, for putting this together and working with Professor Desbro and putting on this event for your fellow students. Please feel free to contact us if you all have any questions. We're all listed in your on-campus online. So you should be able to find us if you need to email us. Thank you, everybody. We're giving you 5 minutes back. Enjoy your day. And, just remember, if you need to rewatch this, we'll be posting this next week. Thanks, everyone. Bye.
Bye
Thank you.
now.